this is a chart you likely have not yet seen before, at least in this kind of a format. The top part you've probably seen, but the bottom part you probably have not yet seen. So the top is simply just Bitcoin on a logarithmic scale over the long term, right? Starting in 2010, where Bitcoin was just a few cents, all the way to today. And what we see here in blue, this line here, this is the 1 year simple moving average. So you probably have seen that. Now you have not seen what we see here at the bottom. This is the difference, the delta, the extension from that moving average over the years. And this is interesting because what we can see here is that with each market cycle peak, the extension from that moving average declines. Or in other words, the bull markets, they don't run as hot anymore as they used to. So the scale over here on the right is simply the multiple X, right? So 0 means that we have just crossed the moving average. Look at this, right? We cross 0 to the downside over here. This is where the price crosses the 1 year moving average. And then we simply measure how far are we above or below that moving average. So in this case here, we are looking at 7.6. So the price was at a multiple of 8.6 versus the moving average. So let's look at this again. Let's zoom in. The price at the time was roughly 165. The 1 year moving average was roughly $19 or so. So this is how the chart is constructed. The recent rally, right? The peak in February of last year brought us to a value of 2.6, or the price being 3.6 times higher than the 1 year moving average. Now, this is the first interesting thing, right? We are looking at less and less market exuberance during bull runs. The second interesting thing is that we tend to be bottoming pretty much at similar levels. So when we try to find this pretty perfectly here, we try to adjust the horizontal line, we can see at around a 60% drop below the 1 year moving average, we tended to move around. So again, let's look at this. We've got this bounce, pretty much the lowest week, relatively speaking. Then let's continue. We had this bounce, same thing, pretty much the lowest week. Prices before were higher, prices afterwards were higher. And now if we continue in 2018, this bounce, same thing, before prices were higher, prices afterwards were higher. And let's now look at the current state. We are very close to hitting the 60% drop below the 1 year moving average again. We haven't yet reached it perfectly, right? And we did come closer once here again in 2018, and we did see another leg down, which is actually larger than one might expect, right? The drop from here to here is another 20% or so. So maybe we do go down by another 20%, right? But this is simply just an approximation, right? No model is perfect. We are pretty low on that scale though. So I think it's relatively safe to assume, if you can say that in crypto, right? Nothing is safe in crypto, but it's, in my opinion, a pretty good bet to buy now and hold for the next 2 or 3 years. This does not look like an inflated price. At least I think right now it's a bad time to completely exit and hope for it to fall further if your time horizon is not just a few days or weeks, but if you're planning to stay out for, say, several months. I don't think you will find that great of an opportunity anymore. It looks like we are already very depressed according to this 1 year moving average delta. Now, I haven't just prepared the 1 year. I've also prepared the 2 year and the 4 year moving average extensions. Let's look at those. So at the bottom here, we've got now the 2 year. Let's also adjust the simple moving average to 104 weeks, right? We are looking here at the weekly tick size, and this is the chart we are getting. It's slightly different. We can see the second rally over here extended more than the first rally, but the overall tendency of those peaks declining over time is still intact. It's not perfect, but of course we don't expect this to be perfect. Some people use the 2 year moving average to simply start dollar cost averaging into the market, right? They DCA in whenever we are below, and they tend to DCA out when we go above the 2 year. Currently, we are below the 2 year moving average. Let's look again at the bottom. So let's maybe extend this chart a little bit to see this in more detail. And again, try to find the perfect bottom. It's probably around here. So again, we have bounced off quite nicely. And here we actually have already touched the lower band. So for the 2-year, the maximum drawdown historically we saw is roughly 47%. Okay, so 47% below the 2-year moving average is where we usually had our depression. This is currently where we are at. So this is a potential bottoming signal, right? Now, that being said, this is all just relative to the moving average. So let's say we would just go sideways for a year or two, and we would then go down again. Then this model might still be intact, right? If we go sideways, the moving average will come down over time, meaning the distance to the moving average will get smaller. This value will go up, which would then mean we could go further down. But historically, this is not what happened, right? Historically, what happened is when we touched this, we were pretty much instantly turning around again. So this is positive. Now there's one more thing to note here, right? No model is perfect. And one flaw over here that's relatively obvious is that it would tell us that by September of 2024, we wouldn't see any bull runs at all anymore, right? We would stay below the moving average and simply just go down forever. I don't think that's very realistic, right? So take all of these analyses with a grain of salt. This is where technical analysis then breaks down. But I do think we do get some value out of this, right? We've seen pretty good bottoms aligning quite nicely in the past. We do see the market cycle tops are declining in intensity over time. Those kind of findings are pretty interesting to take from technical analysis. I don't think the finding that we will stay below this line forever is that valid, right? We have also seen that this is some kind of a cherry pick. We could also just align the line like this. So who knows? Now there is something special around the 4-year. Let's also move there. But before we do this, if you so far enjoy this video, please give this a like because it will help the channel grow. And of course, feel free to subscribe. I publish videos regularly. So let's go to the 4-year. Now, a lot of people just look at the 200-week moving average. I rather like to look at the 208, but it doesn't really make that much of a difference in the end. The chart looks pretty much the same. The reason why this moving average is interesting is, of course, because it had been a pretty nice support in the past, right? But then also we've got the whole idea around the halvening, the 4-year cycle theory. All of this plays into the 4-year moving average. That's why you want to look at this. What's interesting around this is that we have closed a week now below this moving average, which is a first. This did not happen in the past. It was a close roughly 5% below that moving average. We have seen wicks within the week below it, right? So this was during the Corona crash. And the extension of that wick in the last week was even less than during the Corona crash. But we've never seen a close. This is currently what we see. So when we now want to get the bottom of this chart, we don't have to make a lot of analysis here. It's simply just the 0 line, right? Go over here, the horizontal, at 0 as a price, and we are now below that line even, right? We can barely see this, but we are below the line. And the extension decline here is also a thing, of course. We can see this on any kind of moving average extension. The growth, it slows over time, which is to be expected. The market cap of Bitcoin rises with each cycle. It takes more and more money to push the price up. And so getting these 12x extensions from one cycle to the next, it's not realistic over time, right? We have to somewhat meet reality at some point. Now, what's the takeaway from all of this? It's not that we can't fall further, right? No model is perfect, as said several times here. But I do think if history is any indication that Bitcoin is currently very, very cheap. There are, of course, narratives around this, why that is, right? The monetary tightening, the decline in technology stocks, the increasing correlation to technology stocks. And all of this is spreading fear. But there is always a reason why things go down. And things can always turn around, right? Why did we meet the 4-year moving average over here? It's because the main use case of Bitcoin at the time, Silk Road, was completely closed. The main exchange at the time, Mt. Gox, got a huge hack. So trading was impaired, using was impaired. And so, of course, all of this created then this massive, massive downturn. Why did we see the crash over here? It was because of the ICO boom, right? A lot of projects that didn't have too much fundamentals. People didn't really believe in the uniqueness of Bitcoin anymore because you can simply just copy paste the code and launch it again. That has then been disproven, right? Similar to social networks. The code is not necessarily the thing that drives everything. It's the adoption. And then why did we meet the 4-year moving average here again? Because of the Corona crash. So it's simply just another story. And each time when you want to buy low and sell high, each time you have to be against the general sentiment, against the masses. You have to be contrarian on the very long term. You have to believe that Bitcoin is still a thing in 2 or 3 or 4 years. If that's your conviction, then you can buy now and simply just wait it out. If you don't believe that Bitcoin will still be around in a few years, if you think the next shiny thing will replace it, then of course this is not the thing to buy. I have a YouTube channel just dedicated to cryptocurrency, and I even call it the Bitcoin strategy channel, not the crypto strategy channel. So I do believe this will turn around. If it doesn't, I will simply sink with the ship. I think this is a pretty good buying opportunity. At least if you're not buying, try not to sell right now. I think this is pretty much one of the worst times in history to sell. At least if you're looking out 1, 2 or 3 years, if you're not just looking at a few days or weeks. Be free to check out the premium membership of this channel. It's thebitcoinstrategy.com. The link is in the video description. We've got a lot of interesting exclusive content. Every day there's a market update. And we've also got closed Telegram groups where you can ask me any questions, where you can look for specific analyses. So you can reach me over there. If you sign up monthly, it's currently $49 per month. If you decide to go with the year, you get 2 months for free. More information is in this video. Hope to see you in that video, and thanks for watching this one. Bye bye.